While 250 million Africans remain food insecure, Africa continues to spend $22 billion annually on food imports, and our major crops continue to be exported as primary commodities without value addition processing. Let's discuss this matter, and joining us from Nairobi to take a closer look at the problem, Urungu Houghton, Senior Advisor at the African Green Revolution Forum. Thanks so much for joining us today, Urungu. So, one of the issues is the fact that we've got small-scale farmers across the African continent who aren't essentially able to scale up their operations. Agriculture is a business that needs scale. So one of the buzzwords right now is farmer, public, private partnerships. Talk to us about that in the context of where that has been initiated in Africa. Some of these success stories when it comes to bringing African farmers on board as farmers that are critical partners in the overall model.
Sure, as we probably are aware that something like about 450 million people, farmers globally, basically derive their livelihoods from agriculture, and if you put that together, that's about 2 billion people on this planet. Within Africa, we have more than 2/3 of our population that actually are situated within subsistence agriculture. And I think the big challenge that we're facing now is how to shift that community from subsistence agriculture to commercial agriculture in a way in which it leaves them being able to add value to their products and also to be able to raise their incomes significantly. And I think what we've learned from the Africa Green Revolution Forum just recently is that the way that we can do this is to ensure that there are relationships built up that are transformative between the state, between the private sector, both domestic and international, but also between farmers as well. And we had some great case studies from different countries, about 7 in total. The one that I particularly found interesting was a case study from Ethiopia, which many of your viewers will know as a country that has grappled with food insecurity for many years. And even as far back, as early back as, about a year ago, we saw a profound deep famine hit that country. We've heard a really interesting story with Diageo and local farmers around the production of barley and essentially using the opportunity of what is currently the need for about 60% of barley to be imported from outside of Ethiopia, finding a way of actually growing that barley domestically and meeting what is essentially a 15% growth in demand for barley in Ethiopia. So we've seen lots of good examples of where when the policy and regulatory framework is in place and you have capacity building of farmers to ensure that they are able to work in larger units, bigger producer associations or farmers collectives, that we are able to produce at scale and therefore not only do two things. One, fight poverty, but the other one is actually create economic growth for the country as a whole.
I mean, that of course is the example from Ethiopia that you find most illustrative of how it can be done, but the important aspect of it is bringing small-scale farmers together to create greater scale. So what was different about the approach here? Because that concept is not a new one, but how they successively, what was different about their model that they were able to successfully do this?
Well, essentially what we know is that for farmers to be able to expand their production, we need to add value to the entire chain. And that's, from support in terms of seeds and inputs to the productive process, so the storage and the transportation, but also to the milling process. So that whole cycle needs to be expanded and supported. And what we've realized that without income, without investment in the entire cycle, what you have is essentially a number of farmers that are productive but are unable to get their produce to the marketplace. Something like less than 10% of African farmers have the financing that they require in order to move to the next level, in order to expand their production in a way in which they would be able to create value and also expand agriculture for Africa. We, in the African Green Revolution Forum that took place just recently, we heard some interesting statistics. 10 years after the Maputo Declaration, the declaration that 52 countries came together and made 10 years ago, something like 40 countries now have acceleration plans for investment in agriculture. We've seen a doubling of expenditure by most governments in terms of agriculture over the last 10 years. And in the case of the international community, something like a 20% jump in terms of financing for agriculture. And this is really important, but overall, the concern that we have is this still falls short of the $450 billion that's required to take, to take agriculture to the stage that it will be able to meet global food demands in the next 5 to 10 years.
Yeah, and of course Africa needs that to ensure that current accounts aren't affected more adversely. But one of the aspects when it comes to investment in agriculture is ultimately the capital has to be patient, because the payoffs you're not going to see for some time. So to what extent is this a factor that means that, for example, a lot of the investment banks stay away from the space? For example, institutional investors don't want to be investing in agriculture because the time horizon when it comes to the investment is quite far out.
Yeah, I mean, we had a lot of companies and agribusiness companies and finance capital also in our conference explain how difficult it is to be able to get quick returns from investments that they've had. But we also had the example of the Kenyan bank, Equity Bank, who in the last 10 years has really risen from essentially a family bank to one of the the top 10 banks in Kenya. And what they did essentially was throw away banking principle and actually begin to focus on what is it that small-scale farmers needed to be able to invest and to get the credit that they required. And what we've seen is that they've expanded dramatically across not just Kenya, but even East Africa now. Mm-hmm. One of the most fascinating conversations within the Green Revolution Forum was listening to the Deputy Minister of Agriculture talk about how important it would be to have a bank like Equity Bank come into Zambia and create responsive banking for small-scale farmers. So it is not true that there are no returns in agriculture. It's simply that the returns may not be overnight and may not generate the quick kind of profits that companies maybe want to see. But for those that are willing to invest in the long haul, like Equity Bank, they have been able to expand their operating capital dramatically, and hopefully, as we will maybe hear in a year or two to come, that they will now be expanding into Southern Africa as well. So I think there is an opportunity there. The thing we do know about agriculture is that agriculture is a growth industry, particularly within Africa. There is a limited amount of financial investment that is available, and there is a growing demand for foodstuffs, whether it be from Coca-Cola or Cargill or Unilever, and much of that food demand will have to be met from Africa. Even for countries like China and India, it is Africa that they are turning to first and foremost to be able to produce enough food to meet their domestic needs. Mm-hmm. What we in Africa have to be very careful about is that this growing demand does not further outstrip our own capacity to feed ourselves and expand our foreign exchange bill in terms of food imports. So that, I think, is the biggest challenge, how to exploit the demand that's about to hit the continent, but also be able to meet food security needs at home. Mm-hmm.
One of the issues that isn't often talked about in the agricultural space is one of corruption, and that between private and public agencies. I mean, how prevalent is corruption in the kind of value chain of agriculture in Africa right now, and where are the areas where the focus needs to be put when it comes to stamping out this corruption?
Well, I think there's two types of corruption here. Perhaps what we would call corruption in the context of companies bribing the state to relax certain regulatory policies or taxes, and therefore the company being able to generate more profits simply by not paying their fair share of taxes. And I think that's the first area. The second really is exploitative practices that leave small-scale farmers at the prey of much larger business entities or business companies that are essentially buying cheap and selling, selling expensively, and therefore robbing the small-scale farmer of the primary benefits of their labor and their production. So I think there's two types of corruption. The first type, I think, as our revenue systems and our accountability systems and our governance systems improve, will become less and less in the future. But I think if we're not able to build capacity among producer associations and among farmers, so that they know that that they simply by moving their produce 5 to even 15 kilometers from their farm, they will get better prices. Mm-hmm. I think that will continue as well. So I think there is a role really for both companies and non-governmental organizations to continue to educate the farmer, continue to give them as much market awareness as possible. We had a very interesting gentleman from Nigeria who essentially has set up a community radio station that essentially does this, provides information about livestock prices, about the cost of staple crops, but also helps with where to buy seeds and fertilizer variety that is more beneficial for the crops that are being produced. So I think more information, more transparency about markets is what will make the real difference in terms of corruption.